Good morning, traders, and welcome to the Jackrabbit Club. In this video, we're going to take a look at the portfolio as it closed on Friday, July 28th, 2017. First things first, I want to point out that if we go over to the monitor tab, based on the accounts that manage the weekly breakouts that we manage on a weekly basis, I should say. Those are all highlighted in blue. I've started trading some stock in one of my other accounts on the daily. Just trying to see if I can generate some income off the markets. And I'll be honest, it's not an easy thing. Not at all. I very much prefer the weekly chart. That's just me. That's my style. But you know what? I'm going to try. So looking at the weekly positions highlighted in blue, you can see we're up 9.38% in open profit, a little over 7,000, and we made about $267 on today, which is Friday. And you know, the market continues to just work. The trades continue to work. If we take a look at the performance, if you haven't noticed already, I did add a few more tabs to the top, one of them being performance, because I figured it's important that you guys know that who is behind the microphone and on the other side of the screen is actually trading this in real time and getting returns, because obviously you don't want to follow someone that's not getting returns. So last week we're up 16.23%, this week up 15.51%, and I've actually gone ahead and documented all of the completely closed trades. So where we're selling half, I'm not putting them up. I'm putting them up only when they come completely off the books. And you can see that we've had some nice wins in Apple and Adobe, one loss in Marathon, and a loss in Starbucks. And if you want to continue to get these, or actually you guys already get them because you're on the list and that's why you're here. So this week up 15.51. So we gave back a little bit over last week, but considering, you know, not a bad week whatsoever. The other couple tabs, just some guides that I'm putting together. You can see the simple steps guides. Again, if you're interested in those, check those out. The master guides and the e-courses, those are under construction and they'll be a process. Master guides, I'm trying to do like a longer ebook, maybe like a 30-40 page type of book. And then e-courses, there'll be videos about specific items, and have to figure out the right way to do them. And finally, last but not least, just about me, who I am, and you know, some quick facts about me. But with that said, let's get into the markets and let's take a look at our trades. First, let's go to the one account. All right, Amazon. All right, so we talk about following a process, and we talk about, you know, really just waiting till a trailing stop is hit. With that said, there's also the opportunities that the market presents itself that are almost too good to be true, that you have to at least take something off the table. So that happened this week in Amazon for me. You can see we were long pretty heavy, just about $6,000, and that's a big position size for me. I like them more around 4 or 5, but 6,000. That had inflated. We went from 888 to 1068, so we made about $200 per share on the trade. So I was up about $1,400. And you know what? I said it had such a great run. Let me take a little bit off the table. So sure enough, I took half off the table, or half of 7, which is 3. And I said, you know what? If it goes higher, so be it. But if it goes lower, I'm going to feel better, and then maybe look to reload on a pullback or another breakout. And that's exactly what I did. So we took some money off the table in Amazon, took a nice $539 profit. I still have 4 shares from the 888 area. And for right now, stop is staying where it is. All right. We've reduced risk by taking position size off the table. All right. So that allows me to keep the wider stop and go ahead and just let the trade work. RTN continues to work. All right, we've entered this back here the week of May 1st, and it's just continued to move higher. So no real consolidation since this level at 159.50. It just continues to move higher, and sure enough, we're going to continue to follow it. win. All right, let's move in a little bit. Let's change this. Let's go to 3-year week. All right, there we go. Okay, so what's win doing right now? It's not that it's a bad thing. All right, it's just consolidating. All right, so there's really not much else to say about it. I mean, you know, I don't want to do these long commentaries when there's really no reason to. It's consolidating, you know, and right now it looks like maybe it broke this more accelerated trend. But as long as it stays over this 127.40 area, I'm going to just stay long. All right, remember, this is a reversal trade. So it's a little bit different than the other names that you're going to see it hit resistance at key levels. And sure enough, let's look over to the left. As it came down, remember, what was support will become resistance, and what was resistance will become support. And if you take this level, you start over here at 139 and you extend it over, all right, and look at where it happens to land. All right, let's look at the other one, you know, here. All right, so it's a little off, but still, nonetheless. All right, so let's see if we can get back over 139.50. If we can, then I would expect to see the stock trade all the way back to 159. All right, it's that simple. If we break down, then maybe we're rolling over and coming back and looking to test. So that's, you know, you have to make the choice. Are you going to just sell half, see if it comes back, tests and move up? For me, I would take all of it. All right, it broke my level, I'm out. And I will continue to watch it to see if it comes back to 120 and bounces. And if so, then maybe I'll do it as a pullback trade. But that's my style. DHR, all right, this is a break of support, all right, but again, depends on where you want to put that support level. So, you know, with it being such a marginal break, I mean, the fact that I have to zoom in for me means it's marginal. Okay, let's zoom in. My level was 81.57. Obviously, that was not specific to a specific level, but let's see, the low here 81.58, the low here 81.36, the low here 81.50, and now we're at 81.43. So for me, I'll watch this. If it breaks this low here at 80.66, I'm out. All right, I move on. Very simple. All right, I'll just monitor that throughout the week. If at any point during the week we break that level, then I'll be out. Okay. UNH, all right, just continues to move higher. We've been trailing stop to the previous week's low. Sure enough, you had two breaks here, but now we have another previous week's low being this week, and we're going to trail up to it. So we had a big sell-off, move back, and this one continues to run. Now, when we break this level, most likely I'm not selling the whole position, all right, because it's not breaking a key support. It's just breaking a previous week's low and may go into a consolidation period. So that's something I want to be very clear. When I trail to these previous lows on an accelerated trend like this, I am just taking half of the position off, just like we did in ITW, which we'll get to. But here, you know, just like we did here, I took half the position off, and then we're going to let it work. All right, Berkshire B, a new breakout. All right, so let's move this so we can actually see what's going on. And what do we have? So we had a pullback, all right, a breakout, a consolidation, and a new breakout. So what are we going to do? All right, we're going to draw the new consolidation, which is right about like that. Zoom in. Okay, so you can see it hit the top, came down, all right, came down, hit the top, here, here, here. And we're going to move our stop to the new low. And there's one other thing you could potentially do. I am not going to, because the position size is so large already, but you could also add to your stop. And if it's a position that you're not in, or you know that you want to get in, then you could definitely look to get in on this level, on this breakout too. Just be aware that you have some resistance up here at 177.50, and you can see I've actually noted that with an alert just because I want to know about it. All right, let's put this back so we don't forget. But I mean, like I said, It doesn't have to be harder than that. It broke out. So when you get a breakout, you get a new trailing stop and you add to your position. Okay, those three. As soon as I say breakout, you should be thinking add to the stop, or move the stop, add to the position. And sometimes it doesn't work to add to the position. Sometimes you're going to outsize your position where it's too big. That's fine, all right? That you don't have to add at that point. Microsoft. I mean, think about this one. If I didn't add here at 58, which looked like a ridiculous move on this immediate rejection of that breakout, all right, that's what I was looking at. But I added to it, and I added substantially to it, almost more than doubling the position just because of how it worked out. Well, now Microsoft is, from that ad at 65, it's trading at 73. It's $8 higher, times 58 shares. I just picked up another $500 on the trade, as opposed to if I had just left the initial position and let it run. All right, so I think it's very important to add on strength. That's one of the things that I've changed and has changed my trading, I should say, is adding to strength. All right, cut weakness, add to strength. And AVGO, all right, similar to a lot of the other tech names, hitting some resistance right at the top of the box, and you can see it tried to break out, didn't work, pulled back. So would not be surprised to see this maybe go sideways for a little bit longer, but as long as it stays over 233, I will stay long that name. All right, let's move on over to the other account. And I guess these are in no particular order, but they should be. BBY. All right, remember last week I said we were going to hold these two closing lows, or these two wick lows, as the new stop. Sure enough, that worked out to our advantage. Very good move there. And now trading back above where we were. So we could have easily gotten out at 54, now trading 57. And, it comes down to patience. And just understand that things don't go up right away. Just got to manage the expectations and manage the positions. DGX, all right, we had a big move here, breakout, all right, and then we just really consolidated. Earnings were this week. It sold all the way down to 105. We stuck with our plan, held our plan, and sure enough closed back above that level, closing at 109.50, staying in the name. DHI, all right, looks like maybe it's hitting some resistance up here, but let's see how it reacts. Okay, now we want to see, does it go sideways, does it break out, what is it going to do? But right now stop still 32.50. FedEx rolling over. All right, we had all these weeks where again it continued to make higher highs and higher lows. Sure enough, the first week it didn't. All right, and at that point, yes, you could have taken half off if you really wanted to, but I'm just kind of in the mode to let this one work. This one may consolidate. Maybe it comes all the way back to trend line. Maybe it comes back to the resistance level. You can see here that I have an alert in on the what was resistance. Maybe becomes new support, because I want to know if it gets back down there, do I have the opportunity to add to the trade? Okay, let's see. Does it reverse? All right, GLW. All right, ugly week. All right, this was one of the stinkers in the portfolio, and it had earnings. All right, and again, this is all things that happen. This is part of the game, and this is why I love keeping my position size so small. All right, because I didn't even feel it. It wasn't even like I was like, oh, did they have earnings? And that's one of the things about trading the weekly chart, is it automatically makes you keep your position size small, that you can just forget about some of these names. That you even have. HIG continues to work. All right, ICE continues to work. Just really consolidating here. So let's see. Now it had a couple times where it hit, has these wicks, 1, 2, 3, and 4, all trying to move higher, all getting rejected around the 67 level. Does it hold? ITW. All right. If this was a full position, I'd be freaking out, because I'd be like, all right, do I need to get out? What do I need to do? But because we took half off, I'm just going to let the thing work. All right. If not, I'd be managing by my profit and loss, and not by the chart. Has it made a new low? No, technically no. It has 1 week where it had a low, it reversed, and then it moved down again. But a low for me is classified as, after you get a breakout, you get a low. All right, breakout, low, breakout, low. breakout, low. All right, so for me, I don't have the breakout, so I have no new low. So we're going to stick with 136.48. And if we come all the way back down on 136.48 and break it, well, at least I took half off. JPM, all right, has gone sideways since we entered. And last but not least, Netflix, where again we took half off last week just to have a better position size. And that's it. So I have the opportunity this week to add 2 new positions based on what I've calculated I have in cash. And I think those positions, well, let's look at it from a realistic perspective. So I have 2 accounts. The first account, we have 2 industrials, 2 consumer discretionaries, 2 financials, 1 tech, and 1 healthcare. In the other account, I have, again, 1 industrial, 1 consumer discretionary, 2 healthcare, 1 financial, and 2 tech. Okay, so I want to add, it's going to be it's not going to be AGN, it's definitely going to be CHTR, it's possibly going to be COL. Disney, you know, it's tough because I always like to own Disney for my kids, and I'll probably honestly own Disney over a better setup just because it's Disney. But I'm curious too about the reversal. You know, does it really? Is this like, you know, up, back, up to 121, back? That's kind of what I'm thinking may happen. And the other one is EA or Estee Lauder. But Estee Lauder is a staples play. EXC, I'm not going to own. KO is too close. EXC, there's resistance ahead. EL broke out. EA broke out. Disney, there's definitely some resistance. Disney's not the right play just because it's Disney. All right, so it's CHTR, COL, EA or EL. All right, those are the 4. I can't. Disney is not the right play, and it has earnings next week. All right, Disney's not the right move. All right, so Disney's out. And you know, I have the microphone on, but this is actually how I go through my positions. I talk to myself. All right, so I'm going to pause the video and I'll tell you what we're going to do. All right, and we're back. So what we decided to do was we're going to add EA and CHTR, and the EA is going to get, or I'm sorry, the CHTR is going to get added to this account. And you can see here that now we have 2 consumer discretionary names and 2 tech names, okay, plus Amazon. So really 3 tech names, but Amazon's not necessarily classified as tech. It's probably actually more consumer discretionary than anything else. And then that'll leave us 2 healthcare and a financial. The other account is going to get the EA, okay, and that'll then give us, where'd we go? EA. So that'll give us 2 tech names plus Netflix, and then we have ICE, which is a financial, JPM and HIG, and then 2 discretionary. So the reason we didn't add Disney was because, first of all, we have discretionary names are in the portfolio, and honestly the setup is not the optimal setup. I mean, it's a pullback, yes, but you know, we have a lot of overhead resistance where the other 2 are breaking out to all-time highs. So I'll always take the all-time high over any type of reversal trade. Second is we didn't take COL because that's an industrial, and you can see in this account we have ITW and FedEx, and in the other account we have RTN. All right, so yes, I could have added the industrial here as opposed to CHTR, but felt like CHTR was a better fit. So that's it for this week. If you guys have any questions or comments, let me know in the comment section below, or email me or tweet at me. I hope you enjoyed this, and hopefully next week we're coming back with some more profits on the table. Have a great rest of the weekend, and we'll catch you next time. Take care.